Welcome back. Well, markets actually have seen some kind of recovery from the low point of the day. So we were down more than 100 points at the lows of the day. Decent recovery, not too bad. I think a couple of, heavier stocks. Even the Nifty Bank actually has cut its losses. Axis Bank is a stock that's fighting back quite strong. And RBL Bank as well. That's another one that I think you should be keeping on your radar. Probability of it moving out of the F&O ban. I'll tell you more about that in just a bit. But we've got Tushar Pradhan, a director at HXGON Partners, who joins us on the show. Hi, Tushar. How are you feeling about the markets? This 1,000-point rally has come out of nowhere. It's been a bit of a left-out feeling, actually, for many on the street because things were not really looking up. The economy is still very, very soft. But suddenly it seems bulk of the street is betting on a big recovery in the second half of the year. Going by the rate cuts, going by the stimulus measures that we've seen, and GST 2.0. How are you feeling about the markets?
I couldn't agree with you more, Nigel, because I think whatever we needed to really see from a policy perspective, what we wanted to see from an interest rate perspective, I think all of those things are already in place. I think what was missing probably all throughout into the year was an earnings pickup, which we did not see in the last quarter of the last financial year. We did not see in the first quarter of this financial year. And what we are hoping to see a little bit of an inkling of in the second quarter of this financial year. We should see the numbers very soon next month. But I think the big move in earnings growth should come in the third quarter, which should end in December, which is just after Diwali. And that is really when we'll see the bulk of whatever the expectation is, whether it's delivered or not. And of course, the busy season comes in the fourth quarter of the financial year. So I think what we are heading for is that the environment has been prepared. Now the delivery seems to be the one which is lacking. And I think that is something that the market will take a cue on as soon as we see some of the results coming in next month for the second quarter of this financial.
Tushar, hi, afternoon. This is Reema here. In the morning we were talking to Dheeraj Agarwal of Ambit. And he was saying that, we were just discussing how markets have been sideways. And he's like, yeah, this is a themeless market. It's all about individual stocks. And he says, this reminds me of the period, I think of 1994, 95 to 1998, a 4-5-year period where the index did nothing, but individual stocks. That's what made you the returns in the alpha. And he also went on to say that you will see a pop now. If we do get a India-US trade deal, etc., markets will do well. But generally, he expects only a mid-single digit kind of returns for the next few years for the Indian markets. Would you be in that camp?
It's an interesting question. And I think there is some validity to, kind of agreeing with that. And I'll tell you why. If you look at stock market ownership, and I think we're talking about the top 20 stocks across, the Indian spectrum, you will see that almost every portfolio, whether you take it as a mutual fund, whether it's an FII, whether it is a PMS, whether it's an alternative, any portfolio, you will find them chock-a-block with the top 10 companies, whether you like them, whether you don't, because they're all reasonably priced. Now, the problem is that unless there is a significant uptick in the demand for these companies over and above their current holding, and in other words, I'm saying they're overowned, it is very unlikely that these stock prices are going to move anything else except for strong earnings growth. And as we all know, the large companies are not going to grow at double digit. They're probably going to be low double digit or kind of up to high single digit. Now, that doesn't give you a confidence that the market as a whole is going to go up because these companies are likely to now not really have any PE re-rating left into them. Having said that, I think the composition of the market, of course, can change. There are companies at the lower end of every index, which is what we call as the tail of the index, which sometimes gives some impetus to the exchange itself. And that's where we are seeing actually some of the mid-cap indexes and the small-cap indexes continue to do well because they're not so weighted so much to 1, 2, or 10 or 15 stocks. They're across the spectrum. So I think when we look at a market, we need to kind of dissect that and to say which market are we talking about, which index are we talking about. So if you're talking about the Nifty 50, I would tend to agree with your sentence that maybe because of the large companies within the Nifty being so, I would say, overowned across every portfolio, it will take something really special to move them significantly higher. And as a result, the entire market will be a result of that. So one would tend to agree. But I would not disagree also to the fact that there are significant individual stock opportunities that one should be looking at. And I think that is clearly where the alpha will come in. And I think there is something to be said for active management in a period like this, where most of the large caps are part of the index and they're partly owned across most portfolios in the market today.
Okay, all right. Tushar, I was looking at the holding, the FI holding, and on the whole, they have been very, very underweight. But if you look at sectors, they're holding in IT, that's come down to, I think, around 7.2%, which is, the lowest we've seen in multiple years. And the tech index, as it is, has underperformed. Now, suddenly, the kind of soundbites you're getting from the Globe, valuations, various other arguments are that things could start bottoming out and there is some interest that's coming back. The good part for them is they have clean balance sheets and, the dividend paying out, the cash, cash flow yields as a percentage as well looks pretty okay. Do you think you would start allocating gradually to the tech space?
I think when I look at tech, I clearly make a distinction between the large tech, which is the Wipros, TCSs, Infosys's, of the world, where they are in a different space altogether, and they are largely led by the kind of offshoring of and the outsourcing volume that we get from the US especially. But when we look at mid-cap and small-cap IT, I think that is something where it is very interesting from my perspective. Because the large caps are largely going to follow the overall trends of outsourcing in the market, and which is where the question mark is. First of all, in terms of growth, because they already are at such a stage that significant double-digit growth from here on seems very difficult to achieve. On top of that, there are pressures in terms of the economy. Now, we just heard that the Federal Reserve has cut the interest rate in the US, which is signaling some softness in the unemployment figure there, which again tells us that they are either bracing for some sort of maybe a flattening in the economic growth perspective. So if that happens, again, there is more pressure on the larger caps IT businesses in India. So I think there is many probably spanners in the work here to kind of make a very clear, distinct positive for the Indian IT space. And I think that is being reflected in the lightening of the FII portfolios. Now, if you say that if that period of lightening is over and should we look at it back again, I think that should again be circumspect with the kind of expectation of return from here on. So you might get a little bit of a spike, but it's nowhere near going to be something what people should expect from the mid caps, especially in the IT space.
Thank you, Tushar, for joining in. Enjoy your weekend. Let's get back to the market.